What's up, you guys? Welcome back to the channel. For those of you who are new, my name is Evan and I make videos about hot stocks, dividends, and options. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now in today's video, we're going to go over some big news that actually came out for NIO, especially for those of you who haven't really been keeping up with NIO super closely the last week or so. And this is regarding the stock dilution that we talked about last week for NIO, where they've gone about selling 60 million shares to raise some capital. And so we're going to go over how this has affected NIO and how this could affect NIO going forward as well, especially for those of you who are invested in NIO or those of you who are planning on investing in NIO in the future. But before we actually jump into it, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it, and it lets me know that you guys enjoy these videos every day. So again, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it. But with that out of the way, to kind of give you guys some context, NIO today is trading right around 4% in the red, right around that $40 area. And it seems that NIO wants to be around this $40 consolidation area, because if we actually look at the 1 week chart, NIO has been pulling back all of last week and into this week as well. Now this was not all due to NIO selling these shares. There was actually a lot of news leading up to the stock dilution that affected NIO as well, and it wasn't even specifically news towards NIO. Because if we actually look at the 1 month chart, you can see, and it gives you a better picture of how NIO has been affected the last few weeks. NIO had hit a high right around $50, and that was on November 23rd, and since then they've been pulling back and it's been pretty much red the last few weeks. Sure, they've had a day here and there where they were green, but for the most part, it's been a downward trend the last few weeks, and I think they're finally consolidating around this $40 area. Now, I could be wrong, and they could pull back even more, and they could continue dropping into the 30s, but I think NIO kind of wants to stay around that $40 area. And I think from here on out, NIO should continue going up, and we're going to go over that in a little while, why these pullbacks should stop, and why NIO should start rising like they were previously. But to give you guys some context of why NIO has been pulling back the last few weeks, obviously it wasn't because of this stock dilution that's happened. Most of it was due to these other EV companies in the EV sector, and they were all receiving negative news, and that was greatly affecting NIO. Because we know that all these EV stocks are kind of in it together, or at least in terms of their share price and the way they trade. We know that for the most part, all these EV stocks trade on a very similar trend, especially in regards to Tesla. A lot of these smaller EV companies like NIO, XPeng, or Li Auto, they kind of follow the trend of Tesla, and when Tesla is up, most of these EV stocks are up. But in the last few weeks, why NIO is down, it kind of started with these smaller companies like XPeng and Li Auto, where XPeng actually got a downgrade on their rating and they went from a buy to a neutral, although they did get a price upgrade up to $59, I believe. And then there was also a short seller against Candy, and that affected most of these smaller EV stocks as well. And then on top of that, there was a short seller for Li Auto, and then later on, Li Auto also did a stock dilution and they sold some shares to raise capital. And then XPeng and Tesla did the same thing as well. And so now we're seeing NIO kind of hop on that trend to kind of keep up with these other companies and to stay ahead of XPeng and Li Auto by raising somewhere around $2.8 billion. But in terms of this stock offering that NIO has done, NIO said on Monday morning that they planned a secondary stock offering which was priced at $39 per share. Now obviously this is a discount from Friday's closing price of $41.98, but this is something that we see quite often when a company sells more shares. They can't always sell them at the current trading price, especially given the fact that Friday closed higher than today, and because that news came out on Friday that NIO was selling shares, obviously they opened lower today, and so NIO couldn't sell their shares at that high price around $42. But this basically suggested that the banks underwriting the offering needed to offer their clients a bit of a discount to move the shares. So this basically means there wasn't enough trading volume to get these shares sold at the price that NIO wanted. And generally this is not considered a bullish sign when a company is selling their shares cheaper, but I don't think it's such a terrible thing either, because we know they gave the news on Friday, and so it's pretty expected for a company to open lower the following Monday after announcing that they're going to be selling more shares to the public. But on the other hand, NIO's offering was oversubscribed, meaning that the underwriters opted to purchase additional shares above and beyond the initial planned amount. So that could be considered somewhat bullish and somewhat negate the fact that NIO had to sell their shares for a few dollars loss on the closing price as compared to Friday. But we know that NIO said last Friday that they had planned to offer 60 million more shares to the public, and that their underwriters, Morgan Stanley and China International Capital Corporation, had the option to purchase up to 9 million additional shares. But this was actually revised upwards over the weekend, and NIO is now selling 68 million shares at $39, and their underwriters now have a 30-day option to purchase up to 10.2 million more shares. So that could bring the total to over 78 million shares if their underwriters do exercise these options. Now, for those of you who are planning on investing in NIO in the future, or maybe you already have shares of NIO in your portfolio, I would argue this is a good catalyst for NIO investors, and it should return a good ROI in the future, especially considering the fact that NIO is raising right around $2.8 to $3 billion. And this isn't just money that they're raising for no reason. Obviously, they're going to put this back into the business to earn more money in the future. So even if your shares take a slight hit in what they're worth right now, because there's more shares in the market, that doesn't mean long term they're going to be worth less. So for those of you who don't know how an offering works, you can basically look at it as like a pie. You can look at NIO as a pie, and right now you might have a certain size slice of that pie. Say for example, you owned 1/4 of NIO. Well, if NIO offered a bunch more shares to the public, maybe after the offering, your 25% goes down to 20% of the total worth of NIO. But then long term, the pie increases overall in size, and so that will likely surpass the amount that the 25% of shares were originally worth. So companies do offerings for a few reasons, but it's generally to raise money that should make the company more money in the future. Now, the time to be kind of concerned is when a company does multiple offerings in a short period of time. Now, we know early on, especially last December, NIO didn't have much cash and they weren't sure they would make it through the next year. Well, now obviously they made it through a world pandemic and they're showing that they can kind of fight these battles. And right now they're not short on cash. And so they're taking advantage of the market right now when EV stocks have a lot of hype around them and they're selling their shares when they can get a good share price. So I would do the same thing if I was the CEO of NIO. I would take advantage of the good times in the market to earn some capital that theoretically should make more money for NIO down the line. But coming from NIO, they said that they plan to use the net proceeds from the American Depository offering mainly for research and development of new products and next generations of autonomous driving technologies. They're also going to improve their sales and service network expansion and market penetration. And lastly, they mentioned that they want to put some of this money towards general corporate purposes. So you can see that they're not trying to waste this money and they're not doing it because they're in debt. Now, we do know that NIO is not profitable yet, but they didn't raise around $3 billion to get out of debt or to become profitable. They raised this money to improve their technologies, which in the next few years, you should really see a good ROI on that money that they raised by selling these shares. And going back to their underwriters, Morgan Stanley and China International Capital Corporation, because they granted these underwriters the option to buy 10.2 million shares, if these companies actually exercise these options, that would mean that NIO would raise about $400 million more on top of what they're already raising. So again, that's another bullish catalyst for NIO going forward. And if you guys are wondering why NIO sold these shares at $39, you have to look at it as a positive thing because even just a couple months ago, NIO was trading drastically lower than they are right now. So again, NIO is just taking advantage of the high valuation that has resulted from intense investor interest. And of course, this really does bolster their balance sheet, and it makes NIO look a lot better to investors for the future. And it gives them a lot more future growth and potential because they have a lot more cash on hand. And another good thing to consider with having this much cash on hand is that if something goes bad and we see another market shut down or the economy crashes, NIO has a decent amount of cash to kind of hold them over. So even though they do want to put it back into their technologies, they're not going to just blow through this money instantly. So if something bad happens again and the economy is in danger, at least NIO has a nice amount of cash to kind of hold them over for a few months. And overall, this is really good news for NIO because even though the price is discounted and they sold these shares at $39, the fact that NIO is still trading above $40, at least as the time of recording this, it really shows that investors understand that NIO is just trying to raise money, and we didn't see them drop too drastically even from Friday's close around $41.98. Now, for those of you who made it this far into the video, I want to hear what your guys' thoughts are down in the comments about NIO doing this stock offering. Do you guys think this is a positive catalyst? And are you happy with what NIO did selling their shares right around $39? Or do you think they should have continued riding the market and waited for NIO to go even higher in share price and maybe have sold these shares to the public at an even higher price? So let me know down in the comments what your guys' opinions are on this offering and whether you think NIO did this at the right time or whether you think they should have waited more into the future to raise more capital. So again, let me know down in the comments. Lastly, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. When you sign up and deposit $100, you'll get 4 free stocks. So make sure you guys get your free stocks while this promotion still lasts. Also, if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.